right, good morning. Welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Happy to be here. It's July the 8th, all day today. That's 1 week down of July. We only have 3 weeks left. It's flying by. We've got the end of the week. We've got a WASDE report, so we'll make sure you're up to date on that. But it looks as though we're going to get a little bit of moisture, and these markets are telling us that's the case. So we'll see if that comes to fruition. But right now, that's what they're thinking. So this is going to be the overnights. Let's take a look. I'll bring up a corn board. We're down 7.5 cents in that SEP contract. 403 is last. We're 6 3/4 cents lower in the East. The new crop 417 1/4 is last there, and we're about 3/4 cent off the low of the day. We've had about a 7-cent range, right? So that's corn. What do we do in the beans overnight? Well, I'll tell you right now, they were lower as well. We got an August board down 13 1/4 cents. 11.53 evens last, but it's really the new crop. That's down almost 20 cents. 19 1/4 cents lower to 11.10 1/2. We're just a half cent off the low of the day, and we've got about a 15-cent range going on over there. How about wheat in Chicago? Chicago wheat, well, that too is off 12 cents in that SEP contract. 578 1/2 last there, and that's a penny off the low of a 13-cent range, right? When we go out to the March, that's 12 cents lower to 620. That was the close overnight, or at least the last overnight. We're a penny off the low there, and again, another 12.5 cent range. Let's move to hard red in Kansas City. That too is the same, 14.5 cents lower there in that SEP contract. 584 1/2 is last. That's 2 1/4 cents off the low of the day. And we're working on about a 15.5 cent range, all right? So we're 2.5 cents off the low of a 15-cent range. That's going to tell you what's been going on there. March is down 14 cents to 615 3/4, and that's about a penny and a quarter off the low there as well. From Kansas City, let's go to Minneapolis and take a look at the spring wheat. That's down double digits across the board, except for the SEP, which is almost down double digits. 9 3/4 cents lower in that SEP contract to 623 1/2, a penny off the low of almost an 11-cent range. Go out to the March. That was SEP. This is March. 10 3/4 cents lower there to 655 1/2, and that is on the low of the day, folks. We've only got about a 4.5 cent range out there. That's spring wheat. Finally, let's take a look at cotton. That was one of the ones that was up during the radio show, and it still is. We'll go right to the East. That's the new crop, 81 points higher to 71.79, only 5 points off the high of the day. All right, let's bring him in. He's usually the one we start the day with. That's going to be Brian Hoops, Midwest Market Solutions. Brian, thanks for being on the show. Good morning to you. Happy Monday. If you didn't do anything, if you were Rip Van Winkle and you woke up this morning and looked at our markets, you'd think, maybe a little bit of rain snuck in.
You would tend to think that. It was a good morning, Scott. And everybody's asking this morning, why are beans down so much? Why are they getting hit so hard? And I think the answer is Hurricane Beryl that is moving, into land in Houston area and is expected to track northerly, and it's going to hit Missouri, Indiana, Illinois, and it's directly in the path of a lot of double crop soybeans. So there's beans being planted after this winter wheat harvest, and that double crop certainly could use some rain, some water on top of it. It's going to get that this week. The rest of the country looks to, kind of dry out in those areas that need to dry out, such as South Dakota, Iowa, Minnesota, up in that region. They need much drier weather. They're going to get it this week, and there's just no threatening heat on the horizon right now. So, you have a lot of pressure against the soybeans. The wheat crop is hearing news out of the Kansas wheat harvest that those yields are coming in much, much larger. We had about a 200 million bushel crop in Kansas last year. This could be 325, maybe 350 million bushels. It's a significantly larger crop last year, and that's our number one winter wheat producing state. So you have all kinds of this supply pressure hitting the market at the same time where maybe demand starts to slow after the 4th of July. Brazil's corn crop now harvested about 42% complete, 20% ahead of normal. So that crop is hitting the world market much sooner than normal to compete with U.S. corn exports.
So I got to ask the question. I'm going to ask it of everybody today, I think. But, you just heard, I don't know if you watched the show earlier, but Tammy kicked off with the fact that we have 61% of 23 still on farm. So if you haven't gotten rid of a lot of your 23 and you haven't done a lot in 24 yet, what do you do now?
Yeah, there's no magic bullet here. There's no easy answers because the best marketing opportunity has passed us by already. So now you're looking at either selling on small rallies or just selling and moving to a flat cash position. And if you really want to be bullish, then you re-own it on paper. You can go out and do some option strategies that are very cheap. You can use the futures market if you want. But I'm afraid that with that much on-farm storage coming to the market at some point this summer, you're going to see basis levels start to really widen out. I know they're tight right now. That makes it a good selling opportunity because nobody else is selling. So if you go ahead and maybe get a decent basis and combine that, with some of their marketing maybe next year, you'll come out okay. But there's just no good answer here, Scott.
Yeah, I mean, it is tough. And maybe we'll also get a little bit more of a picture. I think I saw that are we going to get what the funds positions are today? Does that come out today?
Yes, correct. It was delayed because of the holiday from Friday till this afternoon. So you have commitment of traders this afternoon at 3 o'clock, also crop progress this afternoon at the same time.
So we'll get some more data, but there's, I think you're right. I think with so much on-farm storage, with any big rally in corn or beans for that matter, there's 48% of it's beans, 61 corn. I think that mutes those rallies. I kind of also think it muted the last rally. What do you think?
Absolutely, it did. Yeah, there was a lot of sales that were made on that last rally, but as you mentioned, 63% of corn, 48% of soybeans. There's a lot left to sell, so any rallies will be sold pretty hard. And I really worry about the basis that, as you know, we've talked in the past, it's really tight now because no one else is selling. Take advantage of that tight basis because at some point that crop is going to hit the market, and that's going to weaken that basis in the last half of the summer.
Yeah. All righty. Great stuff. Stay right there, though. We need to go away and we need to pay some bills. We're going to come back and talk more with Brian Hoops. He's with Midwest Market Solutions. We'll be right back after this. All right, welcome back to a Market Day Report. This is where we talk about the livestock, right? And if you wear this jacket, you got to get the livestock out there. And we're just going to go over where we were on Friday. Remember, that lobby, they have a much stronger lobby, and they were able to not have us trade overnight. I don't know how they did it, but I love it. Anyway, bring up a live cattle board to remind ourselves where we went away on Friday, and we had August up 50 cents, 186.42. But as you go out the deferreds, we lost a little bit of real estate. We finally were lower by 20 cents in the April to 191.32. But all in all, you can see by those changes, there wasn't a lot going on Friday. How about the feeder cattle? Well, they were down about $1.50 across the board. August was off $1.90, leading the way lower. 261.47 was where we closed there, only about 22 cents off the low of the day. That as you go out the deferreds, even January was down $1.40 to 259.77. And then finally, let's take a look at lean hogs. And they were also a little lower. We had August off 65 cents to 89.17, but these weren't big changes. And as you go out the deferreds, even February was off 62 cents to 72.10. All right, and that was only 15 cents off the low of the day out there. So trading heavy across the board. All right, let's bring him back in. Mr. Hoops with Midwest Market Solutions. He's got a little magic machine that shows the opening orders. How does that look for us here today?
Well, in the case of the cattle market, I think you're looking at another mixed open, similar to what we saw in the close, where August, October wants to trade a little higher. Those deferred cattle contracts and the feeder cattle opening a little bit softer this morning, similar to what they did on Friday. The cash trade I thought was disappointing as they were looking for higher money. We saw steady at best across the plains. So now you go into this week, we're looking at a full kill week, which will do a couple things. It means the Packers probably going to need some cattle. The show list might be a little bit larger this week because we're carrying some over, but they probably also need some cattle because they've been light buyers over the last couple weeks. We get into this full kill schedule, we should see those kills push back up above 600,000 head. They were well below that last week because of the holidays. So that'll also in turn start to weaken the box beef values, which means the cutouts start to trade lower. Packer margin's probably about $35 a head profitable right now, so they have some money to work with. Probably see steady to higher cash trade this week. But then after that is when we start to get concerned about these bigger kill numbers hurting the cutout values and also hurting demand for beef. Typically, after the 4th of July, demand starts to soften for several weeks until we get into Labor Day buying interest.
Yeah, and if you've got any doubts as a rancher, just look over to the row crops because when they pull the rug out from underneath you, they can pull the rug out from underneath you pretty quickly, right? And so you got to be owning some puts or at least some protection, right? Real quick, 10 seconds.
You absolutely have to. Just look at what happened last year.
Yeah.
In September, we dropped over $30. You don't want that to happen again because these feeder calves are even more expensive than ones you bought last year.
All right, great stuff as usual. Have a great morning. Thank you very much for opening us up here, Brian Hoops. He's with Midwest Market Solutions. Bring it back home to Nashville and say good morning to Tammy.
Good morning. Happy Monday to you.
Yeah, right. There's only one a week. Don't screw it up.
That's right. Only one chance at this one.